supports us to get there. Now, when I talk about enabling environment, and this is really important in terms of even what we've been doing over the last couple of years, when we talk about attracting private or increasing private capital and investment, our role was really to see how do we create an enabling environment to increase diversification and deepening of our existing sectors, but also beyond that to introduce new sectors. And the primary goal for that is really to address some of the gaps that have been highlighted. How do we increase access to more long-term, affordable, alternative capital? And it's through the reforms, some of the reforms we have passed, that allow for investors and actors to be able to set up different structures and vehicles that allow for more pooling of such alternative capital. And now on the other side also, you talk about ecosystem. How do we increase the access to financial products and services currently available? And it's through increased financial actors and service providers. And so us as the Rwanda Finance Investment Promotion Agency, in terms of how we aim to facilitate increased attraction of private capital, it's really through that enabling environment that can allow, if you're talking about reforms, for example, in increasing domestic savings, increasing access to the development of, for example, collective investment schemes, increasing access to pooled funding, for example, crowdfunding, that you're able to access different pools of capital to support, but also increased access to different vehicles that allow increased individual participation. And I think this is really where the tech component will be critical. I like the point about deepening capital markets. I believe really our role is in seeing how do we work with regulators to facilitate that increased tech, I would say, enhancement. And I know maybe I could give like an example in terms of some of the reforms we've passed around the central securities depository reforms, for example. That will unlock a big component in terms of increased participation to securities and other forms of capital and other forms of savings, I would say. So I think it's really what I could call a collaborative effort, and our role is to ensure that we continue creating a more enabling environment that allows for increased access to capital.
Thank you, Hortense. I want to bring Corinne into this conversation, and I want you to wear your two hats, RBA and EcoBank. And when you look at the banking sector, it's largely the backbone of financial intermediation. Now, my question here could be, or is, how can banks turn their banking aspirations into impact for both citizens and businesses?
Thank you, Arnold. Good afternoon, everyone. So I think before I respond to your question, I want just something strike me when they were presenting, the growth that we expect in the next 5 years and 20 years. And when you look at the speed of change that we've seen in this decade, when you read, they tell you that it took the telephone to have 100 million users. It took, I think, 75 years. And it took 25 years for the mobile phones to have the same number of users. It took Instagram 2 years, and it took ChatGPT 2 months. So I believe really the world is changing, the transformation is real, and as banks, we cannot really afford to think in a linear way. We need to adapt quickly. We need to transform the way we operate, and that has been the biggest enabler for us has been technology. So the digital, the AI today is really allowing us to reach to the untapped market. When you look at payment systems today, a few years ago, not very long ago, maybe 10 years, it used to take 2 days for a person to pay from EcoBank to BK, because you have to go through the clearinghouse, you have to exchange checks, people have to go back to office and reconcile. Today is instant, and it's 24 hours, and you don't even need to think twice before you transfer money from a wallet to a bank, to whichever bank or to a SACCO. So I think in terms of what the banks is expected to reach and really the untapped market, I mean, the expectations are high, but there's been some strides, yeah? Now, I think what is important is how do we transform financing from just, exchange of money to now real financing. And that is what technology and the digital and AI is allowing us to do. And we continuously improve where we can offer financing without necessarily asking for collateral, and really looking at the person physically and asking a bunch of questions. Because of the payments that are moving across the banking system, today AI allows us to have algorithms that will look at your payments flow and then give you an instant credit based on that. So I think what I want to say is there's a lot of transformation that has gone through, and that has significantly lowered the cost of offering services. And one of the key, I think, from the presentation was also one of the barriers is the fact that it still costs high to access financing or access bank services. So I think that is one thing that is also will continuously lower. And also, how do we finance some of the sectors that are not really, that are today risky because of the way we tap them. So now with technology, this is allowing us to understand those sectors better and create product that really speaks to the cycle of the sectors, and also putting in place risk mitigation to address that. So I think it is more now the speed at which we will move to tap the untapped markets, and that, I believe, will help us to scale and achieve these very ambitious targets.
Speed there. Ivy, I want to bring you into the conversation, and earlier you saw from the presentation very ambitious targets and capital markets being key to 2035, 2050 ambitions. Capital markets now, stands at less than 1%. Of that, the target is for it to grow to, upwards of 10, 12% by 2050. The question there is, how do we attract more domestic and foreign investors into Rwanda's capital markets? Can we still do business as usual?
Okay. Thank you very much, Arnold. You see that I have my tablet. I had a lot of points, and I didn't want to forget any. Looking at the report, I think PwC did a really, really good job identifying all the issues pertaining to the capital markets and putting in concrete strategy to address them. But as we say, when it comes to the pudding, the sweetness is in the eating. And it's when the rubber hits the road that we'll really see what needs to be done. But there are a few things I want us to address here. Key amongst that is the plumbing, the structures that support the capital markets. We've talked about automating the functions of the Rwanda Stock Exchange, for instance. And it's key that if you want to digitalize trading, you want people to access trading on their mobile phones wherever they are. If you don't have a stock exchange that is electronic, that can't happen. It doesn't matter what you do. If you don't tackle that first issue, that can't happen. So in terms of priority, I believe that is what we need to look at. Because another area that limits us in the capital markets is that without the Rwanda Stock Exchange being digital, and then without connecting us to the rest of the East African region, and then also now with the African Stock Exchanges Linkages Project, then accessing resources, accessing capital, enabling access to our markets becomes a challenge. So I believe the first thing that needs to be tackled related to the Rwanda Stock Exchange is the automation of trading and all ancillary activities surrounding it, including the CSD connection. It's something that I'm sure Jimmy from CSD would remember me. I've asked several times when they are upgrading their systems to allow us to do certain things that we currently cannot do. So that's one of the key things I wanted to point out, the plumbing around capital markets. And for us, the main institution we know, the main actor is the Rwanda Stock Exchange. And they need to be empowered to connect us to the rest of Africa and the world. The next, I believe, if we want to attract capital into this market, is also around standards. Now, when you're talking about foreign investment and foreign investors in advanced markets, they've gone through the stage that we are now going through. And they are at the point where they put in certain standards in place to protect investors and to protect the players in the market. Now, we have the benefit that we don't have to reinvent the wheel. So there are certain things that if you look out, and that's where I can commend Rwanda for being very proactive in these areas, that you look at standards that are across the world and you try to bring it home. But a word of caution when you're applying those standards and bringing those things home is that you also have to assess the stage of the market. Because if you take certain things wholesale from an advanced market where they've gone through the teething problems that you are currently now going through, or you are now about to even teeth, and then you just bring it wholesale, it makes it very expensive for the existing market players to operate. And then you open the channels that instead of empowering locals to take up the mandate and take up the mantle to lead the development in the country, then it's more foreign players who have the capacity to meet the standards you are talking about. So if you are implementing these things, you have to go in a gradual and measured way that brings everybody along, especially locals, because if you look outside alone, they are well prepared because they've gone through these things already. I believe these are the two key things I want to mention when it comes to that, in addition to some of the policies they've mentioned in there about CMA working with BNR for FX trading regulations to ease capital inflows and outflows. That gives comfort to foreign investors. So that I can commend that is a laudable initiative that should be pursued. I think I'll stop here. I could talk the whole day.
Thank you, Ivy. I want to bring Regis into the conversation. And Regis, I want to note a figure that stood out in the presentation. There was a figure of 95% of pension benefits going to men. The question from that figure is, how can both the pension and insurance sectors work differently to serve the underserved groups? Should go right.
There you go. Thank you, Arnold. Let me start with the figure you referred to. I think you have to look the beneficiary of the pension benefits today. You have to look at historically of the composition of the workforce in the past, so which translates into, as a male-dominated workforce, especially in the formal sector, getting to the age of retirement or in the retirement now. So that translates into the composition you referred to. But the good news is that when you look at active contributors, we are seeing, especially with some very good policies that are very gender positive, and then the composition of the labor workforce today, you see that dynamics changing. But when you look at other schemes like Ejoheza, with over 4 million active savers, you note that actually 51% of the savers are women, which will directly translate also when you get to the age of retirement. It's a relatively young scheme, 6 years old. But what you see is that with that type of composition, we are doing better than before. And ultimately in the formal sector as well, with the policies, with the level of education, in the intentionality within the government and the private sector, you see that changing, that in the future as we head to 2030 or 2050, it will be completely a different picture that we'll be looking at. As far as what should we do in the insurance sector to increase coverage and accessibility, I'd say mainly three things. They sound cliche and simple, but it's the doing part of it that is not always easy to do because it requires a lot of skills, a lot of intentionality and commitment to do it. The strategy presented here, I don't think there's anyone in the room who would say it's not good, well done. And in a way, we all know how to do, what to do. But it's how collaborative and aligned are we on doing what we want to do, know how to do, right? So that the insurers, the bankers, the government, you know, there are many things to be done, but each one of us going in our corner doing it alone won't help. It's we miss out the synergies that needs to be done. So what I mean there is on the intentional collaboration. I think there's a lot to gain if we can collaborate intentionally, where from the telcos to the banks to the pension managers, in the end of the day, we are looking at the same citizen, right? And yes, from private sector, you would want to do it at a profit. But why should I have to build my own infrastructure, my own database, my own data analytics, when collectively, if we actually joined, you know, we're talking to this member, this citizen, I'm trying to sell them an insurance, you're trying to sell them a bank financial product, we're trying to sell them medical insurance. It costs so much, we lose so much time and resources by trying to do it alone. So number one is intentional collaboration. A few of my colleagues were talking about today, the universal merchant code. Like, how is that not something we should all be fighting to have? Where I have to pay, and you know, now our switch is helping and really encouraging the work they're doing. But why are we still there? Today we have, RSSB covers 90% of the citizens on medical insurance, right? These are people who every year, as we speak today, we're over 82%, just the first quarter of this fiscal year. People who have understood that medical insurance is important in their lives. I'm always pushing insurers and bankers, why haven't we received a combo offer for this Mutuelle de Santé? You know, combo mixed with you buy this and you get this on top. We've done a bit of it with Ejoheza, with Sonarwa Life, offering a life insurance. So the first point I want to mention is just intentional collaboration. And where it's like we protect our infrastructure and our space, but we miss out of the synergies we can gain by all of us. You give something to open up the space, and then we compete on value proposition, right? I wish we get to a day where every Mutuelle de Santé or Ejoheza account come with a, you know, I don't know, universal bank account, where if I'm the first one to sell you a better insurance product, you pick me. If I'm the one to offer you a better bank account, you pick me, and the cost of switch should be very easy, so that we can compete on value proposition. So from a pension manager where we manage, I'd say we serve every Rwanda in every corner one way or another, 93 or 4%, give or take, if you include between Rama and Mutuelle de Santé, every year, right? There's so much room to play if we really are intentional, willing, and committed. Like I said, it sounds cliche and simple, but it's the doing part that is a problem. Number two, there's a good saying in Kinyarwanda, I think RBS says, right? I don't know if in English it doesn't hit the same. The number one thing is information, I don't know. But what that means is we also need to jointly and intentionally communicate our value proposition on, you know, insurance and these financial products that are sold. Right? If you look at the Maslow's pyramid of basic needs, there are things I need. I need to eat, I need to rest, shelter, and all. When it comes to insurance, it's a different another level. So I think when you look at an example of Mutuelle de Santé today, you hear, again, it's an RBA cliche, says, Mutuelle Kudie. This has been engraved in their mind that I need to be insured. And it took many years of education, engaging the community, where they are, engaging the farmers. It doesn't matter which corner you go in Rwanda, every citizen will tell you about Mutuelle de Santé. And they'll tell you it's a priority for me, for my family. They've understood. Before, the story I hear, I don't know, someone maybe see the seniors in the room who are part of that. The stories we hear it wasn't easy. It wasn't at all to convince people, you give this money and every time you need to, it's like, no, I'm not sick. What do I pay but now today? So what this means is, I want citizens listening and can understand these things. It's not so complicated, but we need to invest, not to advertise, to educate. Educate them about financial products. We're having a very interesting conversation with the Ministry of Education today about embedding savings, long-term savings and financial education into there's a curriculum about civic courses, right? So that I don't know how many of you learned about mortgage and taxes and financial management when you were in school. I didn't. I learned it when I was grown. Hopefully it's changed, but engraving those types of, I should know how to manage my personal finance. I should understand why it's important to save when I get my first pocket money or paycheck. Things I don't learn when I get my first paycheck. It's too late. It shouldn't be the responsibility of the government alone. We all benefit, bankers, insurers, innovators, entrepreneurs, when people have money they've saved that can be used to buy our product and our services. So expecting government to do all this, government should educate, build schools, and then build a consuming market for us. No. So again, it's Nchambena Makuru in that sense that if we can help our society understand our value proposition, not just from a client, I need someone who can buy my service, but I need to invest in educating you so you understand why my service is actually critical to your success as a citizen and human being. 3, innovation. There's a lot of Me Too products. Just from a bank accounts to an insurance product, a lot of Me Too products. Or they have it, we have it. But properly catered, tailored products per segment, the needs of insurance or financial of a teacher or a farmer or someone working in a mine or a motorcycle driver are completely different. And these are markets that have significant numbers of people. Some of them are seasonal, have different type of risks. Now we're talking about climate risks as well. But I feel there's a lot of Me Too products where, you have it, I have it. It's really who makes much noise for me and who can cut who. Now the insurance, they made it difficult because they've kind of aligned on the fees. So you just have to choose where do I know someone I can call to make sure my service is faster, let alone the digital channel. So we need to be innovative and take a long-term view into our innovation, right? Where it's not just about beating the next quarter. If you think of the story of Mutuelle de Santé, it took years, but today, within the first 3 months, 80% of your, so we call them members at RSSB, if you as a bank or insurance, 80% of your clients have renewed within the first 3 months of the fiscal year. That's a great business, if you ask me. So, but you have to long-term view to invest in education. And what we're doing with the Ministry of Education, we hope, Ejoheza is a voluntary scheme, growing at a very healthy pace. We hope, gone will be the days where the executive or RSSB has to almost, make people feel like they have to comply. But where, at the beginning of the year, I get my first check, someone can say, Ejoheza kujihe. Semwe mitueli kujihe, Ejoheza kujihe. Why not mortgage kujihe? Why not life insurance kujihe? So all these things is just taking a long-term view and just diversify, right? And sometimes I would say not to take it too easy. We take the easy route to the client. If you have a long-term view, and this again, not necessarily to blame management, it goes back to the owners and shareholders. We need to, if we in this market for the long run, part of this 2050 vision, what will the products, to achieve this type of growth, we should start innovating around. These numbers will not mean anything if our citizens are not educated to understand that they need them. Not that they have to comply to do it, but that actually they need them. and we need to innovate enough to make sure and share insights. Our policy at RSSB and the government just passed a government data sharing framework, right? All government institutions will be sharing data to ensure our service is optimal to the citizen. But even in private sector, fine with the laws of data privacy, data should be private, but insight should be public, right? No one should sit on valuable insight by themselves, holding value to the market, to the innovator, the entrepreneurs. So public insight where everyone can innovate, everyone can feed off, and just allowing an environment where we all compete on a value proposition. Let's level the playground, and shareholders and owners of these businesses, government definitely is taking a lead by creating this type of frameworks, but let's open up the playing field. You share what you have, someone else shares. In Europe, I think they call it open banking. I don't know if we have open banking here as a policy or if we are heading there. But if you level that type of field where data is private but insight is public, I think it will allow these type of numbers we see to happen. And the rest is intentionality, and I think us being here, Minecofin, and leading the way is a good step. Again, simple, cliche, but it's the doing. And if we're intentional and we commit to the simple things, I think we can get there. Thank you.
Regis, just before I go to Sonia, I want to come back to you, and I want to, you talk about competition, you talk about long-term, and value proposition as well. If the pension sector opens up to private pension players, we saw the report telling us, give us examples of Ghana and Mauritius. Is that something that could help solve for some of these challenges?
Absolutely. Actually, it's something we're already planning to do. We are also looking at how we get better. And I think RSSB has found itself in this position by necessity, not by trying to captivate. It was by necessity, trying to pool resources from an investment perspective. If you look at how RSSB is actually one of the few organizations that has 6 schemes under it. In other countries, you find NSSF for pension, some other insurance for universal healthcare if they have one, for public investment. But the pooling aspect of RSSB from a governance perspective was also to allow optimization of resources and deployment of capital, which gave RSSB the size it has today with assets under management over $2 billion. For those who didn't follow the recent publication, the return on investment of your pension schemes and others last year was 14%, a record high. The fund has doubled. That ROI has almost tripled in the last 5 years. So, and the fund has doubled in size in the last 5 years. Just to tell you, your money is safe and is working very productively on your behalf. But to your point of the idea of allowing fund managers, it's actually, we need that, in fact. It's not of, will we allow, no, we need that. First, to manage the risk and diversify, but also there's some reforms we are doing following the recent increase of contribution to allow, this pool of money is going to grow very fast. How do we make sure for the next many years to come is optimally productive? And that inevitably leads to opening up the field and distributing your capital and to have it managed by diverse type of investors who have different strategies, different risks. And so just to tell you, it's a matter of time, it's coming. I can't see this enough. Every time it's like chicken and egg. Fund managers will say, okay, we can't come if you don't commit. I say, no, come, we will commit. But you have to be here. Because what that means, if you have to be here, it's not just RSSB, come, what's your value proposition? We shouldn't even do it to convince you to come. If your value proposition is actually good, you won't have to convince us on us wanting to make more money for our citizens, for our members. So I think I would say it's a given, it's going to happen. It's a matter of time, hopefully sooner than later. I think that was your question. So it's no intention to be captive fund manager. It's really more of, it was by necessity, and as we have more options, almost kind of like democratize it. You should make the most money for your pension as much as you could, and our job is to, as we increase the level of literacy, give people with that level of literacy and confidence to choose where their money should be managed. A portion of it, and by the way, it's not just to please or open up, it's good for us there's a level of risk we are outsourcing if you choose to have your money managed by someone else, a portion of it, because also there's some level of risks and guarantees that we provide as a defined benefit scheme that the private sector will not be able to cover. But it's a good thing, and I think with alignment and intentionality, it's a matter of time to get these things. Thank you.
Thank you. Sonia, I want to bring you into the conversation. And we have a lot of financial players here. Almost every month, we see a new product being launched for access to capital for entrepreneurs. But capital is still very expensive for most entrepreneurs. What can be done differently for entrepreneurs like yourself to have access to affordable capital?
Thank you. I'll put it in 3 or 4 steps. As a young entrepreneur, women for that matter, I think the first thing should be to do for us is to listen to entrepreneurs, because I'm in agriculture. It's a high risk business, but it's also a high return business. The higher the risk, the higher the return. So products should be designed, especially, yes, also in informal trade businesses, but especially like in agriculture, products should be designed, they should listen to the business owners, the entrepreneurs, to know. I'll give you an example. If I approach a bank today, I grow chili. I do export of chili and avocados for 7 years now. If I approach a bank, they have to first understand that if I need money for my seeds, let's say, or to support my air freight, our air freight, Rwanda, they need to understand that it will take me, I need 3 months to buy those seeds, grow them, start harvesting after 3 months. But not only that, also I'm selling on credit. Also understand that I also need 60 days. And those are things that you can actually even, I can show you contracts, supply contracts that we have. So I think the first step would be to listen, to actually have tailored products that, that helps those entrepreneurs. The second thing I would say is to think beyond, how would I call it, traditional loans. At my age, when I started, I didn't have a collateral. Most entrepreneurs don't have collaterals. If we're talking about young entrepreneurs, you start, but you've managed to push your business from probably 1 million Rwandan francs. You are at a turnover of 500 million, let's say. So you've tried everything. You've tried to have your records, your financial records. You are pushing. So if my business meet all the requirements, but I don't have a collateral, it shouldn't keep the bank from working with me, because we should look at other methods. Like if I have a supply contract, and I'll make sure, and these are things that we've seen that are working in our neighboring countries. If I have a supply contract, and this is, you do your due diligence, the contract is a relevant company that I'm supplying to. And if you can make sure that my payments are coming through that account, I think we should also be considered. The third thing, I think it's also there should be, I think another step that I didn't see talking about is capacity building. So there's, yes, access to finance and inclusion, but also financial literacy, helping young entrepreneurs and women entrepreneurs have access to, have that education. Thank you.
Thank you, Sonia. I think I will quickly throw to Karine here, and a question comes from what Sonia is saying. Bankers, financial players are non-listening. Are you listening?
We are. We heard you. And I just want to also add something to what Sonia is saying. I believe today collateral is no longer a major issue for trade finance financing. Most banks offer unsecured loan for structured transactions, like you're talking about supply financing, which is really looking at the entire value chain and to ensure that the risks are mitigated in every step, and that is being done. Of course, we still have some gaps in terms of the capacity to help our SMEs, as you said properly, structure their businesses properly. We still have a lot of gaps in terms of what we require as banks for us to understand your business better, but how do we come in to support you to structure your business better so that we know you better and we trust you better. And that there's a lot of work that we're doing with some of the development partners, because these are not, it really takes a village to support the entire SME ecosystem for financing. So we're working, there's a lot of development finance institutions today in Rwanda that are supporting SMEs to set up their business better, to respond to the needs that the banks require, so that the banks also can provide a more flexible financing solution. So we hear you. This is really being done, but we'll continuously do that. 2 weeks ago, there was the SME Symposium, and it brought in together all stakeholders, because what the banks were saying is that our business is actually to lend. We actually want to lend. So it is more, how do we work together with all the partners to set up a bankable project so that we actually also can deploy capital. I also want to add, there's a lot of support that we're also getting from the likes of Access to Finance Rwanda and Development Bank of Rwanda, where they come up with solutions for SMEs that do not have collateral, so they de-risk, they take part of the risk from the bank, so that the banks are also comfortable to finance those projects. I hope I've responded to Sonia.
Sonia, they're listening, or they're trying to listen. I want to bring Hortense back into the conversation, and I want to use Regis's words, cliche. Some of these conversations may sound cliche, but it's the practicality of it. Sonia mentions the capacity gap. The report talks about the capacity skills gap. Kigali International Finance Center has many a time come out and said, we need certain skill sets in the market for us to become an IFC. If you could narrow down and pinpoint, what are the skill set gaps needed? You know, the long and short of it. First 2025 to 2030, and then 2050, inshallah, that are needed for Rwanda, for KIFC to become that IFC.
Thank you, Arnold. And I think before I touch on it, it's great to always first listen in to also the other panelists. And I already see use case studies, I would say, of this whole initiative of the Kigali International Financial Center. And maybe just allow me even to piggyback to the question, the discussion that is happening with Sonia and Karine in terms of alternative forms of capital and the potential of becoming a financial services hub, what it actually means in practical terms. And even in the discussion, I came to understand that actually Sonia was able to now get funding from the Rugori Fund in terms of where it was difficult for banking. So, and that was possible also because of that enabling environment and reforms that are being put in place to enable other key actors to set up different vehicles that can facilitate access to capital. And we've been hearing also from Regis in terms of the RSSP, in terms of championing key funds and facilities that are facilitating, again, that access to capital, but also diversifying, increasing I would say, opportunities for learning and engagement. So I think starting from, I think it calls us to first start and understand the opportunity that this presents. And I think even before I get into the skills or what types of skill sets are needed, I think there is room for us, maybe I will speak as the investment promotion agency, around awareness and sensitization about the different verticals, the world of the reforms that have been put in place, and what that means to us as citizens and what we can tap into. Because sometimes there's that misconception that the KIFC is just for international investors, right? If you're looking for cross-border, yes, it's an angle and it's an aspect of it, but there's a lot that we can tap as local investors and financial professionals. So I think it first starts from literacy, that campaign. How do we sensitize, how do we get to know more of what's out there and what we can tap into? Now, in terms of the skill set, indeed it speaks to some of these industries, new industries that are coming up, the new products and services that are now being offered. When you talk about the funds industry that is now coming up, we're talking about asset managers, asset management. That calls for a certain type of expertise to be able to facilitate investors to be able to house their capital here or easily deploy their capital. And so when we look at those skill sets, you're looking at investment management, right? You're looking at that customization of understanding the requirement of asset management. And I think this is an exercise we do anyway, where the Capital Markets Authority is championing a lot of programs and initiatives around investment management, securities management, you name it. And then you have now the angle of the different reforms around, I would even say, because now we're moving away from traditional banking, as Karine mentioned, where you have now the tech, a digital component coming in place. So the expertise is now understanding AI and the use of digital tools, right? When we're talking about capital markets, I think the team called it out. There's a need to now automate it, the stock exchange, automating it, how we are now going to access securities, and that comes from now understanding how are we going to use the tools to be able to easily tap into some of these opportunities. Savings, for example, is no longer going to be just about deposits, right? There are going to be other forms of different ways you can save your money through productive or investable products. So again, that also comes from now understanding some of these tech platforms and how to use them. And so that's another skill set. And then you have some of the skill sets around advisory, and that's a big opportunity coming up as well. Because as you attract investors and as our own ecosystem transforms, there's a need for intermediaries, right? And I think that will always be across the board. I think the guys who will always have the jobs are the lawyers, the tax advisors, because you will always need advisory support in how you structure, how you invest. So I think for us as the agency is really how can we collaborate with our regulators, with key stakeholders to increase sensitization, but also then to increase professionalization of the industry, which is more around the skill sets, competency standards, and I believe with the Skills Council that we're now hoping to have in place, it will allow us to do just that. Thank you.
Thank you, Hortense. Ivy, I want to bring you back into the conversation. And again, Hortense mentions the role of capital markets in building of an economy. So in many markets, you'll wake up in the morning, the first thing you're going to check is if you're checking the JSE or the Nairobi Securities Exchange, NASDAQ, to name but it's very habitual. That pulls capital into the market. To be fair, our RSE is not as competitive, and I can't name the last time I checked, or many of us here checked the movement of stock minus the T-bills and T-bonds on the Rwanda Securities Exchange. What can we do practically to create competitiveness and to make our capital markets attractive?
Thank you. So the first issue here is that if you go to any market, when you get to the market, there's nothing to buy. Would you keep on going to that market over and over again? No. So the first problem that needs to be solved is that you have to have products for people to buy when they come to the market. And then you can also look at the other side of bringing people in. What products do we have on the Rwanda Stock Exchange? We are seeing increasing corporate bonds coming in now, and typically that's what you expect because debt instruments are easier for people to understand. By extending treasury bills and the government's participation in the bond market, it's easy for people to understand corporate debt when you now talk about corporate debt listings on the exchange. So this year, for instance, you've seen a number of corporate issuances coming to the market, AMS, ECTL coming to do a second tranche, and so on and so forth. But the equity side, that's where the challenge is. And it's not peculiar to Rwanda. If you look around a lot of the markets we have in Africa, you see a lot of interest when it comes to the bond debt side, but very few people participating on the equity side. But the more equities you have, the more interest you also have there. So you've seen that in exchanges that started, the catalyst was when government took the initiative to bring in their securities, offload, privatize some of their key holdings that gave visibility to the markets. And that, I believe, is a viable option for Rwanda to consider. Because I'm sure the stock exchange has gone around several times over and over around the country trying to get companies to come to the market. But it's still, we don't see the results as we expect. But if government is bold enough to take the initiative to privatize key institutions that bring visibility, the companies that we know, that we trust around the country, now on the exchange, it will bring a lot of interest on the equity side and now open up the floodgates for private companies to also boldly come to the market. Another key challenge you see is that, and that cuts across companies in Africa, especially older generation businesses. We are afraid to open up because of the risk that you may lose what we've built over the years. So a lot of companies that are coming to the market on the equity side, that is the fear they have, that when I come, I float my shares on the exchange, in another AGM, someone will be challenging me for my own business that I've poured all my energy, sweat, and resources into. So what protections do we have around that? Yes, there's a corporate governance code that protects the investors, to make sure that whatever they put in the companies, there's someone that is looking out for their interest on the board to make sure they are properly run, the business is properly run, for them to be protected. But what incentives do we also give to the SMEs, Sonia, the business owner, to come boldly and not be afraid that they will lose their business? So we have to think of that side as well, that when we are bringing these entrepreneurs into the market, sometimes you have to give them a soft landing. When you come with all the strict rules that they must adhere to, you immediately put them off. So it has to be a gradual process of initiating them into the market, let them understand how the market works, let them get used to the structures, and then over time, when they see the benefits of it, you won't even have to tell them to go to the next stage. They will progress to the next stage themselves. That's another thing. Then when you also look at one of the initiatives that was mentioned in the report, was around an SMU board. Now, that's also a laudable initiative, but we have to be careful about it because we've seen the evidence in other markets that came out with SMU boards and there's nothing happening. Because of the peculiarity of SMEs, their small sizes, it's very difficult to get large institutional investors like RSSB. If they want to buy a stake in any of those SMEs, they literally, based on their portfolio, maybe guidelines, they may have to buy the entire company, which doesn't make sense because they will have risk limits as well that they need to comply with. So in as much as, in looking at Rwanda and that the predominant number of companies you have in this country are SMEs, then you have to have an initiative that bridges that gap. If an SME is coming to the market, is there a fund that, for instance, pools funds across, like RSSB started that invests in SMEs as a pool instead of individual holdings, that encourages them to come because they know they will get the capital. Because if people also come to the market repeatedly and they are unable to raise capital, it discourages others from coming in. So if another initiative under the RSC that I believe is also worth mentioning, the investment clinic, which is tackling the fundamental issues with SMEs, getting them to be investor ready. Once you do that on the demand side, then the supply of capital side, if you also now bring in funds that can invest in these SME as a pool, then you encourage more companies to come forward because they know I'm not just coming to go through a process of cleaning myself with the goal that I'll get money and then I finish and then there's nothing. So we also have to tackle this on both sides when we are looking at bringing companies onto the market. Now, when it comes to the requirements around coming into the market, opening accounts, if you are trying to get investors in, we also need to be mindful of the fact that too many things, if you ask for too many things, you discourage people. Today, I want this, the central bank wants this extra information, and so on and so forth, and becomes burdensome for service providers to keep going back and asking for so many things, especially in a very young market that you're encouraging people to come forward. So in as much as you're also trying to put in structures to protect the market, as I mentioned earlier, you have to do it in a gradual and measured way that brings people in right from the beginning and initiates them slowly into the process instead of having so many requirements in the beginning and then you turn people off before the game even starts. So that's also another issue. Then one last one, and that comes back to Regis, tax incentives and bold initiatives around pensions. Because you see around the world when it comes to mobilizing local capacity to finance infrastructure projects and key projects across government, it's pension funds that do it. We see it across most advanced markets. We've seen it in Ghana when the pensions initiative kicked off. And that required some bold moves by those governments to make it happen. And they say fortune favors the bold. So if we are going to go this way, that we want to put in these reforms, it's not today we think of 2% every year, and then we'll think about private sector investment managers after 20% is given to RSSB. But right from the beginning, we say that out of that additional 8% or so, 5% by law goes to the private, and it becomes, like Ghana's case, for instance, it becomes a defined contribution, so that it takes the pressure off Regis having to think of whether he'll be able to meet his defined benefit payments when he's being mandated to give that money to private pension managers, and he's not sure what the outcome would be. So you have those tiered structures, as the consultants also propose in their report, that allows the private sector to also grow, whilst the pension, state pension also fulfills its duty. And in the example of Ghana, for instance, we see that in about 5 years, the private pensions were now giving the state pension a run for their money. And now people were questioning why the state pension has been there for decades, and in 5 years, just 5% that was going initially to the private pensions, and they are literally outstripping, and currently they are far above the state pensions assets. And so when it comes to, we want to move forward a roadmap for implementing these private sector, the financial sector strategy, the moves have to be bold, and they have to be immediate. So if we say 5% immediately by policy goes to private managers, it's going to kickstart the private investment management space, and all these international investors that you are trying to attract, they immediately know that if I come in, there's some 5% I can fight for. I don't have to start now trying to figure out, because if an investor comes in, they are coming with so many resources, money that they've skin in the game already, that if they are not able to make money immediately, they start losing. So certain things, if they are put in place, attracts them to come because it gives them assurance that there's a base they can start from. They don't have to now come and fight for policy change. The policy is there and it's working. They just have to come and pitch their business, and then they get it. So that's, those are the key things I believe should be, in addition to tax incentives for people to contribute to pensions, like the examples that were given about Ghana, that up to about 36% plus of contributions to licensed pension schemes are tax exempt, both from the company level and the individual level. And if as long as you stay in those licensed pension schemes for 10 years plus, you get to take that money without paying any taxes. So those are some of the things I believe should be done. Summary, if whatever initiatives you want to take, we should be bold about it. We should not beat around the bush, because it just delays the potential results that we are likely to get.
Ivy, I don't want to beat about the bush as well, so I'm going to ask a question. And I want to look at history here, right? We saw the coming in of NASDAQ about 50 years ago, and there was the New Amsterdam Exchange into the NYSE, and that changed the game, or changed the rules by which SMEs or smaller companies could be listed. The AFCFTA protocol on digital trade that has recently been launched gives room for something similar on the African continent. Could that be the direction that unlocks our capital markets?
It could be if we are well positioned for it, because with every resource, it could be there, but if you are not prepared, you never attract it. So what we need to understand is what is required for us to be able to attract that into our markets. And I believe with all these strategies that we have in mind, if we really, really put the rubber on the road and make them happen, Rwanda, because already Rwanda is well known, if you want to get things done, you do it here. Unfortunately, I wish I could say that about my own country. You can still get it done, but it may take a while. The advantage you get in Rwanda is that if you want to get things done and the government, whoever institution buys into it, it happens. So with all these strategies in place or intended to be put in place, Rwanda can easily position itself, led by the KIFC, to be able to attract, not even just into Rwanda, but as a channel into the rest of Africa. I don't want to share the gateway to Africa role that Ghana has with Rwanda, although they seem to be overtaking us. But yes, Rwanda is becoming the gateway to the rest of Africa already. For the EAC region, anyone that is looking to come this way is looking at Rwanda as a place to start off from. And then very soon, I'm very sure it will be not just EAC, but the rest of Africa. And so we stand in a very strong position to be able to attract these if we put in the structures necessary to give comfort to them to bring it.
Thank you, Ivy. We're going to open up to about 2 questions from the audience, and then we'll get our closing remarks and then break off for lunch. So ask maybe the microphone to be moved around for those 2 questions. Just put up your hand if you have a question, and then you could ask that question. And as we go to that question, Regis, Ivy says bold moves could open up, and the pension fund is needed to make some of these bold moves. So what bold moves does RSSB have in store?
Thank you, Arnold. And thank you, Ivy, for a good intervention. RSSB has been, if you look at the past 5 years at least, been going back, a key contributor to the government and vision of development, citizen-centered, and then economic growth. 2020, we switched gears, doing that more, as shown by from the results that we see. And 2026 to 30, which is a new strategy being put in place, is even bolder. Kickstart, we are launching an SME fund. I'm glad you referred to that. We're launching a $30 million equivalent of SME fund, and maybe Sonia, you'll be happy to hear that as well. Our goal is to get it to $100 million equivalent. And aside to it, we put, to begin with, a $3 million margin to cater for capacity, not capacity building in a sense of training, that will be part of that as well, but bring the right people with the right skills and expertise to get a business to scale at the level they need to scale. So if you're an MSME in the room or you know one, it will be managed by, there's a fund manager who has already been recruited, maybe it will be announced soon. Very proven, great track record, established here, capital for growth. So that's to start from 30 to 100, that's our goal. And when it comes to infrastructure, RSSB has been supporting infrastructure project. Maybe we can do better and do more, especially as the fund continues to increase, as the contribution increases as well, from 6 to 20% by 2030. There will be other funds. This is our third private equity fund we are investing in. From Virunga Africa, supported the likes of Catapult, and this MSME fund. We are open for more, talking about opening up the space, and there's capital for deployment. And the more options we have, the merrier for the fund and for our members as well. So yes, maybe I'll leave it like that. We listen, that's one thing for sure. So wherever there's a need and RSSB in our mandate and capacity can be able to contribute to unlocking the opportunity, count on RSSB to do so. I'll leave it like that, so thank you.
Thank you, Reggie. Sonia, before I come to you, let's take a question from the audience. Please introduce yourselves and your question, and who you direct your one question to.
Thank you. Minoko Finn, Nick Darrant, Special Advisor. First, thank you to our hosts, sponsors, and speakers for this morning's session. My question is to Mr. Regis. The strategy describes RSSB as a catalytic anchor investor, the silverback on Mount Karisimbi, perhaps, and of course will be critical to the implementation and success of this strategy. We're grateful for the commitments that you've made this morning publicly in terms of the willingness to open up to partners, to outsource assets to other fund managers, and also to pivot from government securities to private sector, which is so badly needed. Can we expect these funds that are to be set up, either those that you've named or those that will follow, to be domiciled under the KIFC regime to support the vision of Rwanda as a fund management hub described in the strategy? Thank you.
I mean, no other way around. It must be. I think one of actually, when we are talking to fund managers and private or equity companies raising money, domiciliation in Rwanda in KFC is non-negotiable. Another thing we ask is to be established here. We want to see senior investment and advisors and lawyers based in Rwanda as we build. And Nick stepped out, but Hortense as well. This is something that, as a catalytic player that we are, these are things we need to do to make sure we build the ecosystem. There's money to go around. There are opportunities in Rwanda that can be invested in. There are great talent that all they have been waiting for is exposure and opportunity to learn and perform. So no other way around, in fact. It's a condition, in fact, to receive that. And this might be sooner than expected. Again, as I said, RSSB has fulfilled this role as a necessity. And as more of these players come on board, and we have pitch decks every day, and I think it's going to happen then sooner than what the market expects. And again, with the new contribution rates, the fund is going to grow very healthy, very fast. And what we want to demonstrate to our members is that, it's not that we want to do it by ourselves because we are big and we can do it, but also growing the financial sector as the strategy demonstrates. So hopefully sooner than later, at some point next year. Thank you.
Thank you, Regis. Some point next year. Do we have another question from the audience? And this time to Sonia, please. Okay, Sonia, I'll ask the question. practicality of practical steps to ensure that now not only entrepreneurs like yourself, but entrepreneurs in the rural areas can get access to funding. What are those? What could be done to ensure that more entrepreneurs get, beyond the listening, get more access to funding in the rural areas?
Thank you. I think we will have to also have platforms, digital platforms, and because right now most of the digital platforms we have, and even platforms, say most of things are will be in English. I think if we're going into the rural areas, we also have to have cathode and tailored platforms in Kinyarwanda, and still I will emphasize on the education, because we have a lot of women, a lot of young entrepreneurs, especially in the rural areas, who are doing business. They're into farming, they're into trading, but they can't, they don't have that financial literacy that I was talking about. So there have to be a lot of capacity building in talking to them, I would say.
Thank you, Sonia. Some people who have sent just a few messages and they don't want to ask the questions in person. Hortense, there's a question that just came in for you. And the question is, short-term goals for KIFC. What should you be held accountable for in the next 2 years?
Yes, thank you. Thank you, Arnold. I think some have already been displayed there, but I'll piggyback off of what just Regis was talking about, which is more ecosystem. Capital is there. How do you easily access its deployment? How do you facilitate its deployment? And that will largely be through the service providers, so asset managers, fund managers, I would say specialized legal and tax. And that's really who we're trying to now attract to sort of then offer. They always say it's a chicken and egg. So if the money is there, then who will service it and facilitate its deployment at the end of the day? So in terms of the short-term goal, it's definitely going to be an ecosystem play. Over the last 6 years, it has been about the regulatory policy reform for Rwanda to be competitive enough with other jurisdictions, but also to allow us to test and try and allow for more pioneering institutions to domicile and set up. So now this time round, it's how do we strengthen our ecosystem to service? So that would be the critical. And I think also from this discussion and what has been sort of emphasized is increased sensitization and awareness, because there are untapped opportunities. And I guess it's now how do you bring more relevance of the KIFC to the different industry, relevance for the KIFC to agriculture, to trade, manufacturing, because that's an untapped opportunity, and our role is to see how we facilitate that capital deployment. Thank you.
Leaving us with more questions than answers, Hortense. Thank you very much. A hand clap to our panelists, ladies and gentlemen. I want to thank Ms. Hortense Nicole Mudenje. She's the CEO of Rwanda Finance Limited. A hand clap for her, please. I want to also thank Sonia Murunji. She's the founder and managing director of Green Dreams Limited. Thank you for making the time. Regis Rujemanshuro, he is the CEO of RSSB. Thank you for making the time. Ivy Hesse, she's the CEO of BK Capital. Thank you for being with us this morning. And last but not least, Ms. Karine Mutoni, she is the CEO of EcoBank Rwanda. Thank you for making the time. Before we get into our closing remarks by the Deputy Governor, allow me to ask our panelists to please take a photo, and also to invite Mr. Herbert Asimwe, the Deputy Governor Nick Barije, and the PwC team to be part of this photo. And of course, our sponsor, Yes. Mr. Elise Kamanzi from the MasterCard Foundation as well. Invite back the Deputy Governor, Mr. Nick Barije, to give us the closing remarks. He is the man between us and lunch. So over to you, Deputy Governor.
Thank you, Arnold, and thank you to the panelists, distinguished guests, esteemed partners. Ladies and gentlemen, good afternoon. And that's too low. Good afternoon. Good afternoon. They said I'm between you and lunch. Good afternoon. Good afternoon. So as we conclude this important event, allow me to extend my appreciation for your active participation and your unwavering commitment to shaping Rwanda's financial future. Today's gathering is more than the launch of a strategy. It is the beginning of a new chapter, a chapter defined by inclusion, investment, and implementation. The third Financial Sector Development Strategy, FSDS3, is our blueprint for driving inclusive growth, mobilizing sustainable investment, and positioning Rwanda as a competitive regional financial hub. As we draw close to this important convening, allow me to appreciate MasterCard Foundation, PwC team, and of course, the Minister of Finance. We really thank you for bringing us together, but most importantly, for the development of this strategy. Now, the opportunity of always speaking last is then you get to share your thoughts. I want to share with you from what I've heard. I participated in this strategy, but also insights that I've gained from the panel discussions. And three things I want to share with you, which I believe is part of this strategy. First, inclusion that empowers. Rwanda's financial inclusion now stands at 96%. This is really a remarkable milestone that reflects years of progress. But I want to say to you that true inclusion must go beyond access. It must mean usage, it must mean value, and it must mean empowerment, especially for women, for youth, and rural communities. We have a goal as a country that by 2029, we should have full inclusion. And this inclusion should see every Rwandan participate, benefit from the financial system. Second, investment that sustains growth. In 2023, Rwanda attracted nearly US dollars 887 million in foreign private capital, with a significant share flowing in the financial sector. To sustain this momentum, we must deepen capital markets, as has been said, advance pension, as well as insurance. And I feel this is very, very important. We also need to see that there are incentives, like has been said, for long-term institutional investment. This is how we get to power private sector growth, stimulate innovation, and create sustainable jobs for Rwandans. Number three, or the third, implementation that delivers. A strategy, it has been said, is only as strong as execution. This means that policymakers must align on fiscal and regulatory frameworks to enable innovation while safeguarding stability. Development partners need to continue supporting and investing in digital infrastructure, talent development, and institutional capacity. To the private sector, you need to seize the opportunities that FSDS 3 and the Kigali International Financial Center provides in order to scale, finance, and drive growth. This calls for collaboration, it calls for accountability, and it also calls for action if we are to achieve significant success. Now, ladies and gentlemen, I cannot say this louder. A good strategy changes nothing. A well-executed strategy changes everything. Together, we are not just building a financial sector. We are building an infrastructure of trust. We are building a foundation of opportunity. We are building the engine of transformation of Rwanda's next decade of prosperity. I thank you for your kind attention and bon appetit.
Thank you very much, Deputy Governor. So we came here to, understand what the strategy is. We have learned a lot this morning. I want to ask you to please put your hands together for yourselves for being such a patient audience. And in the words of another famous poet, Christopher Wallace, also known as Biggie or B.I.G., if you don't know, now you know. Bon appetit.
Ah.